Okay, guys, so we are about to go over risk management, right? The most common thing a lot of people ask is, "Hey, when I place the trade, where do I put my stop loss? Where do I how do I enter? When I enter, what should I put for my lot size? What should I put? So should I put this much in for this trade? Blase split, blase split. Well, guys, I'm gonna put an end to all those questions right now, man. I'm gonna try to sum it up the best way I can, like the best way I know how I do my risk management, and the best way you should be doing your risk management as well. I am not a financial advisor. I cannot just like tell you guys how much to put in, what to put in, all that. So what I tell my students is the moment they receive a signal, they need to come over here uh, uh, to the risk management calculator, right? So this is what I usually go through before I usually call my signals and things of that nature. So like this is a signal that I went over last week. So this would have been the entry point, 38,000. Our stop loss would have been 38.50, which would have been 50 pips. They would have only risked $10. And then the take profit was 1.37720. And so they would have made $56, guys, off a zero point 0.2 lot size off this trade, right? Comments, incredible risk to reward. Though ensure that this setup is optimal, as you will often face a much lower win rate with these targets, right? So they just want to make sure that you can accept losing the $10, risking 10% of your account, right? Which was $10 out of $100 with a 500 to 1 leverage, guys. So that means the bank is giving you 100. I mean, they give you $500 for every dollar that you put into the market. So, like I said, let's get back to this. Uh, let's get back to this big screen right here. I don't even know if you guys can even see that. Sorry. Anyways, guys. I didn't even share the screen yet. But anyways, this is what I was just talking about right here. So when I call a signal, guys, I give out, so in my Discord board, right, you can go and get this actual calculator yourself. So that way you can calculate your trade before you take it to see if it's a good trade or if it's not a good trade or if you should wait, right? This is a risk management, right? Calculator. It actually tells you everything, guys. So risk to reward ratio, it tell you the national value, your leverage used, it tell you the margins used, it tell you like a incredible risk to reward, though ensure that this setup is optimal, as you will often face a much lower win rate with these targets, right? So this was the GBP USD short. The entry was 38,000, right? The stop loss was 1.38050, right? It was a 50 pip stop loss with a loss of $10. If this trade would have been lost, you would have just lost $10, right? And if the take profit was hit, which it was 1.37720, you should have made $56.39, right? This is off a 0.2 lot size. So yeah, this is $100 balance, 500 to 1 leverage, risking 10%. That's it. Your entry price, it show you if you're going for shorts or longs, right? Longs is up, shorts are down. And yeah, it basically like tally up everything to let you know if it's a good trade or not. So by all that being said, you still have to come over here and jump onto the charts to see what is going on, to see what you see, guys. So my original trade, the original trade for this trade was for me, I got in at 3.8500 and my target was 37,000. I put my team in at 38,000 and I got them out at 37,720 yesterday. So this was their entry exit. This was my entry, or this is my stop loss entry, and then profit target all the way down here, which was a much longer trade, right? So yeah. I didn't mean to move that. Anyway, we don't need them, man. Remove. All this stuff was old. This was yesterday's news. I just wanted to show you guys that. And so for you, and I know, like I said, a lot of people would want to know, like, okay, how would I place my stop loss? So like I did in the example, I will come here and see if I got in at this 8,500 level, right? Price failed to make a new high. Price failed to make a new high. Price failed to make a new high. So say I got in on this entry, my take profit was this 8,550 behind the last high, right? About 50 pips behind the last high. Right here, I will go to the same thing. I will go to this level, this 100. So this 38,100, and I will probably take it 50 pips back to try to risk that 10%. 50 pips back, risk 10%. My target would have been either here or here. You see prices took like almost touching the 37,000, but not quite. Remember, this is a zone. So once price get around this zone somewhere, that's considered um, this 37,000, you know, if you round it off, right? So yeah, so right here would have been another a stop loss, you know, around this. This basically is the 7,700 area. Um, so I probably would have put my stop loss about 50 pips above that. So yeah, about right here, about right here. I would have put my stop loss, and then boom, like as you can see, price drop, failed to make a new high, drop some more, failed to make a new high. Then I could have moved my my take profit to my entry, and then once it cleared here, I could have trailed my stop loss here, and then waiting for the rest of the move to continue to this 37,000. Or I can manually, as I see all this starting to form up, I can manually take, you know, take profits out, right? But yeah, that's basically how that's done, guys. As you can see, you got the confirmation. The 60 is pushing price down still. You had some consolidation right here. Now you had some consolidation right here, so price was just consolidating, and then the moving average was just like playing crossing between each other. Like I said, I would keep my eye out for this crossover, and then just push up to the upside, back up to this 38,500 area. If I see anything else like crack here, I'm gonna, you know, look at this this seven this 6,700 area to make it fall back to maybe wick off, bounce off, and then maybe shoot back to the upside. I don't know yet, guys. We will see. But yeah. So that's pretty much how I would do my risk management. And like I said, uh so pretty much I want to take it more in text with you guys so you guys can really see what I'm saying. So like I said, short position, stop here. Me personally, and like I said, this is off the 15, so I know I will be on the 4 hour, basically trading off this 4 hour bias. Stop loss would have been here. Off the 4 hour bias, take profit down here to this level. So yeah, that would have been at 7,000 level. Pretty much. So basically, how would you choose your lot sizes and your risk to reward, right? So okay, you're here, right? Uh right now this is measure these numbers in between here. This is like a 35 pip. This is a 35 pip lot size, right? Stop loss. So I could take it to like a 30. Even though I would do 50, let's just say 30 pips, right? Let's just say I put my stop loss 30 pips up, right? Um, I put my stop loss 30 pips up. My risk to reward, uh, uh, look at my risk to reward right here. Look at my risk to reward ratio right here. Uh, Not even a 1 to 5, you know. So that's just like, 22% I'm risking. Not even, so I'm risking 30 pips, right? To make, to make 140, 150 some pips, right? So, like I said, let's just do basic math. We're using a dollar lot size, right? We're using a standard, right? Standard. 100, right? Lot size, right? So we're using a standard, and then let me put a background. All right. So we're using a dollar standard, right? So a dollar standard at 30 pips, right? So 30 pips. Or you can do that, whatever they go. Okay. So 30 pips, right? 30 pips. We can make this a little bit bigger. All right. So 30 pips using a dollar standard. So if this trade was to go negative, right? So if this trade was to go against me, right, it came up to here, came down, closed, came down, then shot all the way back up, then shot all the way back up to here, right, and hit my stop loss, I would lose then $300, right? So yeah, I would be out of 300. So I would be minus $300, right? Minus $300. Boom. Negative $300. This is how much I would be negative if this trade was to go, right? So this is my risk right here, right? So now let me put risk. This is my risk. All right, my risk. Well, we can put risk in all caps because that's gonna be a hell of a risk. But that's my risk, right? So if I was to lose this trade, I'm losing $30, right? So now let's just say we had a standard and this is 150 pips, right? Or let's just say 100 pips, right? Because say we took it out early, like right here, because we like, okay, price is fiddling around and it's starting to consolidate right here. So we took our pros out at 100 pips, guys. All right, like I said, I just want to do basic math. So, you guys can talk crazy in the comments or whatever. That's cool, but I'm using basic math. All right. So that's 100 pips, right? For profit, right? 100 pips profit right here. 100 pips profit right here, right? So this 100 pips, right? So that means with this standard that I went in with, right? This lot size right here. So with this standard right here, the standard lot right here, if I hit 100 pips, right, then that equals $1,000, right? So now I'm up plus 1K, right? So as price came here, I done made 100,000. I'm sorry, I done made $1,000, right? So now I just made $1,000. So my risk to reward was risk 300 to make $1,000, guys. If that makes sense, right? If that cleared things up. So if I was to lose this trade and went against me, I would have lost 300, but my reward would have been $1,000, guys. So off this one trade, I could have made $1,000. If I would have scaled in and put another position here, I could have made even more, right? So all that will come, guys, but the basics, I just want you guys to see that. And then, like I said, if you entered in at this 8,000 level, then you would have had to give yourself at least 50 pips back, right? So let me see if I can get that 45. I'm gonna get it. All right, boom, 50. So like at least there, right? And at least you had to put it behind here. So you would at least have to put your stop light right here, right? Just to be safe, right? At least put it back up above 50, above this 8,000 where you started, right? So 50 pips above, just in case price retraced a little bit right here, right? 50 pips above, and then we're gonna put our stop right at this last high, right? 50 pips above. And then, like I said, boom, we're gonna watch it. And we watch it. And then as you see, price never really took you out of into the negatives. And so boom, push, 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 retracement, push. And then now you can move your stop loss down into profit, right? Right. Or break even. So you entered at this 8,000. Now you move your stop into profit, and then boom, profit target reached, right? And like I said, we just want to, this was for like, yeah, 26 pips, 26, 27 pips, right? And it's not because, that's all you guys could have got. Like I said, we could have stayed into this 37,000, but this was the first trouble area. And as you see, price pushed through, retested this trouble area and pushed all the way through, guys. I just want you guys to understand pure price action, price structure, and then I want you to understand key levels where price was moving at. So it was moving at this 37,800, right? But if I would have gave you, um, if we would have took the trade to just here, then it would have probably only been like 10 pips, guys. So, we took it to this 7720 level, even though we rounded it off, because it really would have been 37,700. But like I said, just in case price didn't reach there and then retraced, I gave us 20 pips just to collect profit, guys. So like I said, I made $100 off this play. My wife made like 20 bucks off this play. Uh, hopefully you guys are understanding and receiving these signals, and then you understanding these signals. But pretty much that's how you would really trade, guys. You want to have a plan, right? You want to come here, you want to come here, you want to put the trade in. Like I said, you can keep this to yourself. Your account balance, keep that to yourself if you want to. If you don't want no one to know your account balance, keep it to yourself. Whether you got $50 in there, $10, it'll tell you, whether your account is leveraged from 50, 100, 200 to 1, 300 to 1, 400 to 1, 500 to 1, etc., etc. The amount you want to risk, it'll let you put that in there. You can put everything in here, man. Your stop loss, your take profit from any signal, and then calculate the position, and boom, guys, it's going to let you know if it's a good trade or not, man. Man, I hope that helped out a lot, man. If you can, man, join the free Discord, join the free Telegram group, join the mentorship group so that you can really learn how to, so we can dig in personally to be able to put you guys on the same level to where you guys can be sitting up in these markets and being profitable, actually having reasoning behind each trade, actually taking trades that are consistent, and then maybe you guys can be funded one day. And that's the goal, guys, to get you guys funded so that we can run up a bag, man, have trips, vacations, man, taking care of family, taking care of business, guys, being able to do the things that you want to do, financial freedom, guys. Like I said, man, I don't want to hold you guys too long. I hope you guys love this video. If you do, like, share, subscribe, right? Tell a friend to tell a friend, right? It's a way in these markets, man, that you can be able to do whatever you're trying to do. If you're trying to start a business, if you're trying to do nails, hair, whatever you're trying to do, right? Be the boss of that salon, right? Be able to come in, open and close that salon, right? Be able to give other people that are beauticians a job, right? Because you understand something different, right? You have a different movement, a different bag. If you want to be a rapper, you don't need the label now, guys. If you want to do anything that you want to do, you already put your mind to it and become a better you, then go ahead and get in this bag, man. Everything will be in the description below. Man, I hope this was helpful for you guys. I try to make it as basic as possible, man, without few mistakes, and try not to make it boring, try not to make it so much in detail to where you forget what you're doing. But yeah, that's pretty much it, guys. I'm gonna put this gift down there in the bottom, this pip calculator, because I think a lot of people really need risk management and psychology before trading, because trading is not hard, guys. You need to seek the knowledge from someone, and then once you get the knowledge, guys, you need to apply the knowledge, but not just only apply the knowledge, man. You have to be physically, emotionally, strengthened, guys. You have to be strengthened, guys. You have to be strengthened, and I say physical because a lot of you guys, a lot of you guys you're sitting up hurting yourself because of this, man. And you need to relax, guys. Forex is supposed to be relaxed, having fun. It's about having fun, financial freedom, and building something, guys. So, like I said, yeah, SMSFX mentors, man, and yeah, I won't quit on you if you won't quit on yourself, man. Be coachable, be ready to learn, and come join the squad, man. Get into this bag, man. We 100 pips and up, man. Look how many pips we catching, dude. If you seen this original play, bro, from here to here, dude, 150 pips, man. Come on, jump in this bag, man. learn key levels, learn the reason why the market is moving the way it's moving, and not just simply making trades based off anything, guys. Come learn, come learn, come learn. All right, man. You already know what time it is, right? Let's get it, man. I'm making 10 people millionaires this year. Uh, go ahead and claim your spot. Get in here and get in, get in good. And yeah, I'm looking for coaches and teachers and everything like that. I'm putting you on the payroll too. Let's get it, gang.